What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol SCR for Score Media and Gaming. On the left-hand side, we are looking at the daily time frame, and on the right-hand side, the 30-minute intraday time frame. Let's first start by pointing out the obvious from the daily perspective. Obviously, a massive gap up here and a pretty strong hold. We had a deep pullback early on in the morning, but that was retraced over 100%, and we closed rather strong up there towards the highs. So let's first map out obvious areas of support and resistance. I'd certainly argue that in here was a prior area of resistance. We've obviously closed above, so what would be up next? Certainly this area strikes me, those couple upper wicks and lower wicks offering support from in there. And then really it's kind of all the way back up here towards the highs. I don't want to cherry pick and call 45 the exact top, but somewhere in here around 42.55, let's call it, just splitting the difference between some of these upper wicks and exact candle highs. You get the point. We're just basically trying to get an idea of where the next major overhead level would be. So what do we see on this 30-minute candlestick chart now that there's not a whole lot to talk about overhead, from the long perspective here? Well, the strong close strikes me as bullish. The fact that we didn't close weak after a massive gap up like this, again, is rather bullish here. So we're looking for continuation. That's always the first idea. What you want to see happen is, of course, strong volume remains. So any increase in volume into Friday would obviously be good. I don't think we're going to increase based on the daily time frame, but something that looks like this, something in the range of what we saw of today's volume, as opposed to looking left here, just completely falling off the map, would be good. That would be good for continuation. The more eyeballs on this, the better in terms of seeing that momentum follow through to the upside. In terms of downside levels, if we start to see any more meaningful pullback, let's go ahead and map out some areas of support from this 30-minute time frame chart. I would argue here is a level that needs to hold. Otherwise, things could get a little bit dicey and come down and test essentially this lower run that we saw early on in the morning today. So that level is going to be at 31.27. Simply put, it was prior resistance here, offered some support, the wick of here and the wick of here. So 4 touches in and around that 31.27 area should be noted as support. The other thing I want to point out is let's do some fine tuning based on the 30-minute time frame here. I would argue that this level can actually come down a little bit and would be more accurate to say something like this. 33.22 is the long breakout point, simply because we have upper wick, we have candle touches in here, as well as in the last 32-minute periods of the day, we did see a touch to that level. So a breakout here would start over the top of that 33.22 area. There we go. A breakdown, obviously you don't want to see it violate this 29.68. I'd just say 30 the whole dollar, simply because if we do, not a whole lot of candle structure in terms of what's going on in this lower wick. I think we could easily move back down towards the lows, and don't forget there is a massive gap underneath us that could start to fill if we get down into that territory, way down to about $18.27. That is a complete bear case. I'm not arguing that that is what's going to happen, but you need to be prepared for that type of scenario if you're getting long after a massive gap up. So that being said, I hope you enjoyed the video. If you learned something new, let me know down below in the comments section or by simply leaving the video a thumbs up. Don't forget our main channel is linked down below in the description of this video. And all of that being said, we wish you a green trading week.